Great question, and really appreciate it. Again, I'm just going to reiterate kind of Hedgeye University, right? Make sure that you're really going through that process and you're getting that certification. Chapter 6 specifically has a section about buy, sell incrementally, which I know you said you understand, but I really do wish to just kind of reiterate that fact. To get into the crux of the question and the kind of answer itself really revolves more around the when to execute, right? But the timing and sizing of things are really probably the most challenging aspects of the game. And, that's just really a fact. I think it's probably one of the biggest things that both, Hedgeye Jedis over the years, as well as, newcomers struggle the most with, right? It's timing and sizing and being, having your position at a good size, at a good size position, as bullish trends continue to move higher, and then kind of taking, basically getting smaller as the signal might start to weaken or at the top end of the risk range. But yeah, so the simplest answer is really execute a buy order at the low end of the risk range in a bullish trend that is making higher highs and higher lows, and sell some at the top end of the risk range. Remember to never violate your minimum sizing rules. So again, this goes back to what I, kind of at the beginning of the show and what Keith just talked about in terms of his rules. Don't violate those rules, right? So if you're in a bullish trend and you keep going to the top end of the risk range, for instance, XLE, let's just say, for something that we've been kind of have had exposure to for a while now, and it was probing the top end of the risk range the last a few days. That is a great example of being able to like sell some as it gets higher. Now, if you're out of bullets in terms of, selling some more in terms of basis points of exposure, that would violate your minimum sizing rule, then just keep having that on, right? And you'd see in the re-rank position from the Macro Pro product that, Keith had that XLE just kind of riding, what appeared to be kind of a minimum position size, certainly for the last few days, and then booted it yesterday, right? So kind of the lower low started to be put in for multiple days in a row, and that in conjunction with kind of the signal and oil and the energy complex, he decided to get rid of it and take his winnings and go home and rotate into something else. So that's sort of one way of doing it, right? In terms of your buy order, in terms of executing a sell order. At the top, in terms of a short position, you're going to want to do that at the top end of the risk range in a bearish trend that is making lower highs and lower lows, and you're going to cover / buy some at the low end of the risk range. Remembering again, never to violate your minimum sizing rules. So this is really the most important thing. It's rules, and it's sticking with kind of execution at the top and bottom end of the risk range. Now, I think if you it's not always as straightforward as that, as you guys all know. And so I think a good example might be going into XLP and the other thing too, as well, in terms of kind of sizing, and I'll get into this in a little bit in a few minutes, but you have to remember as well that to kind of beta adjust those positions, right? So if something's got a higher beta component to it, then it's not going to have as big of a max position size, and its minimum size might be smaller than what a traditional kind of like maybe 2% beta position would be. But Daniel, if you don't mind pulling up that XLP as an example. I really just wanted to, because the other portion of the question was like, how do we kind of gauge, executing when something's more in the middle of the range, or like where in the range do we really execute? So I wanted to use this XLP as an example. On the left-hand side is the trend risk range from ETF Pro that comes out on a weekly basis. So that's the range from Monday's ETF Pro product. Again, that's the trend duration risk range. So that's a bit longer term, hence why it's a wider range from top to bottom. The XLP, as an example here, so on the right-hand side, that was the risk range as of 11:30. So November 30th, and that was the day of the question, right? So in terms of, if you combine that with the re-rank Macro Pro product, you're going to see that, Keith added 50 basis points to XLP on the 28th, I believe it was, or no, 29th, excuse me. And it was a ranked number 5 out of 17 position. And then he had another 50 basis points from the re-rank the morning of the 30th, and it moved up to the fourth position of 18. So again, I think this is one of those things where, you got to kind of go through the reps here in terms of understanding, seeing Keith execute. I know not everybody, has the capabilities of sort of, paying up for the Macro Pro product, but this is one of the benefits of seeing kind of the re-ranks and seeing how Keith, rotates daily, and moves his inventory up and down and shifts things. I'd say that was one of the biggest value adds that I found when I first was able to subscribe to Macro Pro. And, it was a huge impact in terms of, how just seeing him rotate his inventory and the positions inside of his long only account and the incremental touches that he made. So, this is, again, I just want to use the XLP as an example here because he did hit the button, not necessarily in RTAs, because he's got to be much more exact, excuse me, in terms of, low end of the risk range. He only gets 3 bullets in RTA. So you got to remember that as well. And so, this is something where if you got the re-rank product, you saw him adding, and then you obviously kind of benefited from the rally in the late afternoon of November 30th. And, the XLP moved to the top end of the risk range. So that becomes kind of a bit of a no-brainer in terms of a sell some signal, right? So sell some, you'll see that yesterday in the re-rank, he sold a little bit of the XLP, 50 basis points. So this is the other thing too here as well, right? So if you're kind of in the middle of the range, but you're sitting kind of at your, min to mid size, position size, maybe you touch it a little bit incrementally in the kind of middle to, lower half of the risk range. And you have that ammo in order to sell some when things move to the top end of the risk range, and you still have kind of like, built a position up so that in XLP in particular has really been signaling quite robust, has been very strong from a signal strength standpoint, continuing to put in, higher highs and higher lows. And that's, so that's, I think a really big component here as well, right? Is that signal is picking up strength, you wanting to kind of add incrementally to that position sizing, and then you're selling some, and, you have some ammo in the repertoire to sell some at the top of the range. And again, maybe at the top of the range, you're selling 25 basis points, on the end of the day on the 30th, and then the next morning you're selling another 25 basis points, right? So, Keith sold 50 on the first, but on the morning of the first, but yeah, so that's kind of one way of doing it. The other component too, obviously is, again, so like, adding on red, right? Like we like sales. And so you add on red, you sell on green. Another kind of key little simple thing here.